Hi everyone, Kim at Marker Insurance, and today I want to talk about flood insurance. I've spoken about flood insurance several times. I want to talk about the private market that is now available with flood insurance. So let's look at a couple of things. First of all, I want to point out my website, markerinsurance.com, and I went under products flood. And right over here I have an illustration of what is the cost of the damages from flood insurance. So let's just look at 1 inch of water and what it can do to a house. It's 12 inches, $72,000. This is based on a 2,500 square foot house, and so on and so forth. It's just illustrating for you how much damage a little bit of flooding to your home can actually cause. I've talked about this in the past. Your homeowner's insurance, your dwelling fire DP policy or commercial policy traditionally do not include flood insurance. You need to buy the flood insurance separately, and that can be bought off through the federal government program, the National Flood Insurance Program, or through the private market. Today I'm going to concentrate more on the private market and the benefits of the private market. So first of all, a policy is paid actual cash value if the limits of insurance are less than the amount of your replacement cost value of your home. So for instance, if you're buying through the NFIP, the maximum allowed $250,000, and the house replacement cost value is $400,000, therefore the valuation is going to drop to an actual cash value evaluation. Add in depreciation on to that house. So if the house is now 20 years old, they're going to add 20 years old of depreciation. The private market lets you do 2 options. One, match what the NFIP is doing, $250,000, and then you'll have this replacement cost value a problem if you're underinsured, or go to the full value of your home. So if you're insuring your home on your homeowner's policy for $500,000, you can insure with a private market $500,000 and will not have the actual cash value depreciation on your policy. Another way to go about it is to buy the policy from the NFIP for the $250,000 and then go and buy an excess policy, a secondary policy above that policy to make up the difference. And then in that situation, you will not have you'll not have the actual cash value depreciation. You will have replacement cost value. That is just something to think about. Today, we're seeing more and more incidents of flooding. I'm in Florida, so I'm pointing out when a hurricane comes by and your house is built with all the mitigation codes and building codes that are here in Florida right now, where you have your shutters and you have your roof connections on there, and the house doesn't blow away. There is no wind damage from that hurricane, but the hurricane moves really, really slowly over Florida, and on that situation, when it does do that, then you end up having flood damage to your home, not wind damage. If you did not buy flood insurance, you will not have flood insurance coverage. I hope this helped you understand a little bit more about flood insurance and the importance of flood insurance, and I hope you consider purchasing a policy. Kim at Marker Insurance, flood insurance with a private market.